Hi there, I'm Irked, and this is my channel Get Irked, where I teach people how to invest for the long term. Before we get too far along, if you could hit the like button, that would really help me out. I'm just starting on YouTube and I can use all the assistance I can get. Thanks so much, and also consider subscribing so that you get my regular updates as they come out. Before we get started, as always, I'm not a financial advisor, and what I talk about in this video are my strategies and techniques to selling a stock. You should consult with a professional to decide whether or not my techniques would work with your investment strategy. Over the years on my website, I've had many readers ask me, how do you know when to sell a stock? There are really only two reasons to sell a stock. The first is to take profits. The second is to close on a losing position. For me, I take profits when a position exceeds the allocation size for my portfolio by more than one share of that position. In other words, I could sell one share of that stock and still have a full allocation in my portfolio. I will continue to sell that stock as it goes up, either until it hits my allocation target and stays there, or the stock stops going up. It's usually the same thing. What is an allocation target? Simple. You take 100% and divide it by the number of positions in your portfolio. For example, if you had 10 positions in your portfolio, each one could take up 10%. If you had 20 positions in your portfolio, each one would take 5%. For me, my investments in play portfolio has 14 positions, therefore the target size is 7.14%. My speculation in play portfolio has 13 positions, so each position is 7.69%. And my pandemic portfolio has 9 positions, so each position is 11.11%. By the way, you can follow all the moves in all three of my portfolios absolutely for free at getirked.com. I do have a membership in order to get to the investments in play or speculation in play portfolio, but I don't charge for it. The only reason you have to sign up is because I need you to agree that I'm not an investment advisor and that you won't follow my moves as if it's investment advice. A good example of me having to sell a stock because it's exceeded my allocation target is Square. Square regularly moves more than 30% at a time, so I'll buy in stages when it goes down to the low of a move, and then I'll have to sell when it goes to the high of a move because it's right there on the verge of my allocation target. By limiting a position's allocation in each of my portfolios, I'm limiting the amount of downside exposure that I might have in case a company sells off suddenly. For example, Square regularly sells off more than 50% over the years that I've held it, and so it can both help my portfolio a lot and hurt it a lot. So I want to limit its allocation, so I'm also limiting the amount of downside risk. Another reason I sell is when I see a super fast percentage gain in one of my positions that I just opened. For example, let's take Tesla. I bought Tesla during the March 2020 sell-off, first at $111.30 on March 12th, and then at $74.20 on March 18th. Tesla ended up bottoming at $70.10 that same day. After my buys, my position had a per-share cost of $92.75 per share. From its bottom, Tesla rallied to nearly $200 in less than 3 months, which means it was more than double my per-share cost. With a double in that short amount of time, and given the fact that it was June 2020 and we didn't know if the market would test its lows, I sold half of my position, which got the original capital back out as well as some profit. I pulled enough out of the position that I actually got $11.86 in profit per share, as well as the shares costing me nothing. Of course, Tesla went on from $200 to reach an all-time high of $900.40 on January 21st of 2021. And once again, this is what I call succeeding by being wrong. I'm always wrong. That's why I take profits when I can and I add to a position when I can, but I never do it all at once because I never pick the bottom to buy a position and I never pick the top to sell a position. So I want to make sure that I always have shares in the position so that I can take profits if it continues going higher, but I also want to make sure I have cash allocated to that position so I can add to it if it keeps going lower than where I bought it. There are a couple of reasons that you might want to take losses and close out a position. For me, the first reason is if something happens that invalidates my investment thesis. For me, my investment thesis is why I hold a certain position in a stock. If a change in the company invalidates my investment thesis, I will close the position immediately. A recent example of me closing a position due to an investment thesis becoming invalidated is AT&T. I bought AT&T in my pandemic portfolio because I wanted a company that had exposure to the digital streaming space and also had a dividend. I bought AT&T near the end of April because it had Time Warner, which owns the HBO Max streaming service, and it had a dividend at the time of more than 6%. On May 17th, AT&T announced that it would be selling Time Warner and that it would be cutting the dividend by more than 30%. This invalidated my investment thesis. I sold the stock at $31.92 a share. And since my buying price was $31.27 a share, I had a little over 2% profit. But that didn't matter. Even if I had a loss, I would have taken the loss on that day. As of Friday, June 11th, AT&T closed at $29.32 a share, down 8% from where I sold it. The second reason I'll close a position entirely is if there's some sort of disaster scenario that affects that specific company. Now keep in mind, if the entire stock market is selling off, I don't close any positions. I look at sell-offs of the entire stock market as buying opportunities, not selling opportunities. However, if there's a big enough negative catalyst that only affects my company, I will close the position even if I'm at a loss. Some examples include if the company announces that there are problems with its financial reporting, if the SEC is investigating the company for serious allegations, if the CEO or CFO unexpectedly and suddenly resigns, and if the company has had a serious problem with one of its products. A good example of me doing this is Plug Power, which I sold from my speculation and play portfolio on March 17th when it reported that it had several quarterly earnings reports that had financial irregularities. I sold immediately on March 17th at my break-even point. My break-even point was $37.75 a share, which means when I sold, I didn't take a loss or a profit because I sold for what I bought for. From that point, Plug Power dropped more than 50% before bottoming at $18.47 on May 11th when the company announced that it had fixed the reports. Even now, as of June 11th, Plug closed at $31.85, down more than 15% from where I sold. I hope my reasons for selling in stages helps you out. Please like and subscribe, watch my other videos, and visit getirked.com if you want information on how to trade for the long term.